Hello everyone. In 2023, there was a positive surprise in global GDP growth despite the rapid monetary tightening that we saw in the last 40 years, primarily fueled by fiscal profligacy across the nations. Additionally, consistent with our view, global inflation proved to be more persistent and interest rates remained elevated for extended period in 2023. We anticipate that 2024 would be a year marked by transitions, primarily driven by three key expectations. First, with approximately 50% of the top 20 nations undergoing national elections in 2024, we foresee a shift in the macro debate from economics to politics. This is especially pertinent as the two largest democracies in the world, US and India, conduct elections to choose their government for the next 5 years. Second, we expect global economies to transition from experiencing increasing inflation in 2023 to a phase of disinflation in 2024. Consequently, central banks are likely to engage in debates around the pace of interest rate adjustments as we progress through the year. Finally, we project that global growth will reach its lowest point in 2024. In other words, we anticipate a slowdown in GDP growth rates in the first half of 2024, followed by an eventual rebound in 2025. We perceive the market valuations to be about 15% higher than 10-year average. This comprises of large cap valuations in line with 10-year average and mid and small cap valuations meaningfully higher than 10-year average. Therefore, we anticipate rather than valuations to drive the outperformance in 2024, we will have to do bottom-up stock picking. Anticipating a period of noisy macro conditions characterized by slowing growth rates, especially in the first half of 2024, we believe that aligning the portfolios with areas of earnings resilience is a prudent approach. In this context, we anticipate the areas that will demonstrate resilience would be in sectors such as industrials, power-related industries, non-banking financial companies, and real estate. Lastly, we identify IT services as a sector to be the dark horse of 2024, positioned as a strategic play in bottoming out of global growth rates through the year. While the risk-reward profile appears positive for large caps in the short term, mid and small caps exhibit favorable earnings momentum over the medium term. We acknowledge that macro instability manifested in unfavorable election outcomes or geopolitical events may pose challenges for sentiment in the near term. Additionally, the impact of higher commodity prices driven by adverse geopolitical conditions has the potential to disrupt the earnings recovery. Given the favorable valuations of large caps and the positive earnings momentum of mid and small caps, we consider maintaining a balanced portfolio across market capitalization to be a prudent strategy in current market conditions. Happy investing and Happy New Year!
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.